topic is all about the tax system and the Philippines development experience. So before anything else, let's define first what is tax. Tax is a system of compulsory contributions levied by a government or other qualified body on people, corporations, and property in order to fund public expenditures. It is also an inherent power of the states to raise income and to demand enforced contributions for public purposes. So it means that each individual, as the citizens of the Philippines, should pay tax because it is a required and it is part of our cultures. And speaking of the cultures, let's talk about the origins or the history of the Philippines tax system. The origins of the Philippines taxation system, it was all started from the ancient Filipinos, where they pay taxes to their dato or the chef for the protections they give to them. And the tax was termed that time is buwis, and everyone is required to pay their taxes except for the dato in the dato's family. And also, the punishments for not paying taxes that times was also implemented on this period. Since that period, there is no president yet, so the dato will be the one to manage or to guide its people to pay their taxes. So the next is the Spanish people. This is the time when the Spaniards colonized the Philippines. So they give the Filipinos modern concept of taxations, wherein the 16 years old to 60 years old are forced to pay tributes or tributo to their king of Spain through the colonial government effort or the 1 peso per year. But there are also other forms of payment, just like gold, chicken, textile, rice, and forced labor or pulo y servisyo. Next is the cedula. In 1884, the tribute was abolished and was replaced by the cedula. It is a certificate identifying the taxpayer that needs to be carried all the time. Why it is need to be carried all the time? Because if someone is not able to present their cedula to the Guardia Civil, they will be imprisoned by being indocumentado, which means they are lack of documents or legal personal's identifications that is necessary to prove your identity that time. The next part is 1987 Philippines Constitution, stating that it sets limitations on the exercises of the power to tax, and the role of this taxation shall be uniform and equitable. The Congress shall evolve a progressive system of taxations wherein the Philippines covers both national and local taxes. And the last part is the train law, where President Rodrigo Duterte implemented the train law or the tax reform for accelerations and inclusion, which was signed last January 1, 2018. This it seeks to correct a number of deficiencies in the tax systems to make it simpler, fairer, and more efficient, wherein the rich people will have a bigger contributions and the poor people will benefit more from the government program and services. So that was the origin or the history of the tax in the Philippines. Let's proceed to the current tax system of the Philippines. In today's tax system, we have what we call BIR or Bureau of Internal Revenue. They are mandated to comprehend the assessments and the collections of all national interval revenue taxes, fees, and charges so as to promote a sustainable economic growth. And the Republic Act 8424, Comprehensive Tax Reform Act of 1997, the taxpayer of the Philippines should be any person subject to tax whose sources of income is derived from within the Philippines. And also, the taxpayers required to have an identifications number. In order for you all to understand well our topic, let's proceed to the discussions of my group mates, which are the types of taxes, the purpose of taxations, the effect of taxations, and the characteristic of a sound tax system.
Good afternoon everyone, good afternoon ma'am. I am Berlin Saldahan and we will going to talk about the national taxes. Here in the Philippines, there are a number of different taxes but we can group them into two basic types. These are the national and local taxes. We will going to identify the taxes classified as national or local taxes later on. Let us first find out the definition of national taxes. These are the taxes that we pay to the government through the Bureau of Internal Revenue. Our national taxation is based on the National Internal Revenue Code of 1997 or the Republic Act number 8424, otherwise known as the Tax Reform Act of 1997 as amended. Every taxpayer should be aware of the different kinds of taxes in the Philippines, including business owners, professionals, employees, and consumers. Now let's identify the national taxes in the Philippines. First on the list is capital gains tax. It is a tax imposed on the gains presumed by the seller from the sale. If someone is selling his property, then he is subject to capital gains tax rate of 6% on the sale of a real property. Payment should be within 30 days after the sale of the capital assets. Next is we have documentary stamp tax. It is a tax on documents, instruments, loan agreements, and papers as an evidence of acceptance, assignment, sale of transfer of an obligation, rights, or property incident. Examples of documentary stamp tax are those that are charged on banks' promissory notes, deed of sale, and deed of assignment on transfer of shares of corporate stock ownership. Next is the donor's tax, which refers to a tax on a donation of gift and is imposed on the gratuitous transfer of property between two or more persons who are living at the time of the transfer. So let's say when you want to donate to any charity program, you have to pay a tax depending on the tax rate in order for the certain donation to be received by the recipient. The person making a donation shall be the one required to accomplish and file a donor's tax return. This is in line with the Section 98 of the Tax Code. However, if the donations made during the calendar year do not exceed 250,000 pesos, the donor should no longer have to pay any tax. The amount of donation that exceeds 250,000 pesos shall be subject to 6% donor's tax. We also have estate tax. It is defined as the tax imposed upon the privilege of individuals to transfer properties at the time of death. The executor, administrator, or the heir shall be responsible for the filing of the estate tax return. Within 1 year after the time of decedent's death, the estate tax should already been settled. However, in several cases out of mercy, commissioner or any revenue officer authorized by him shall have authority to grant reasonable extension not exceeding 30 days. Next is income tax. It is a tax on all yearly profits from property, profession, trades, or offices, or as a tax on a person's income and the like. So income tax basically pertaining to the amount of money from business transactions that the taxpayer is required to pay. However, individuals whose taxable income does not exceed 250,000 is not required to file an income tax return. Next, we have the percentage tax. It is a business tax imposed on certain businesses in the Philippines that sell or lease goods, properties, or services which can be treated under the percentage tax system. Now, what kind of businesses can be subject to percentage tax? Typically, we will know if a particular business can fall under the percentage tax system. First, the gross annual sales or receipts do not exceed 3 million pesos. Examples are life insurance company or corporation with 2% tax rate. Boxing exhibition with 10% tax rate. So just imagine the winnings of Manny Pacquiao in the world of boxing competition in the Philippines every year. Another example is professional basketball, just like PBA or the Philippine Basketball Association with 15% tax rate. Next is we have value added tax or VAT. It is the business tax imposed and collected from the seller in the course of trade or business on every sale of properties, lease of goods or properties, or vendors of services. Here is a sample situation. A farmer sells wheat to a baker for 30 cents. The baker pays 33 cents. The extra 3 cents represent the VAT, which the farmer sends to the government. Next is we have excise tax. This is the type of tax charged on goods produced within the country. The manufacturer or the producer of goods is liable to pay excise tax. Alcohol products, tobacco products, and petroleum products are just few of the excisable commodities in the Philippines. Next is withholding tax on compensation. It is a tax on the salary earned by an employee in the Philippines. Employers are required to deduct and retain a certain percentage of an employee's salary before each salary payment and then remit this retained amount to the BIR every month. Next, expanded withholding tax. As it commonly known in the Philippines is a kind of withholding tax on certain income payments. When a withholding agent makes a payment to a supplier, the withholding agent is required by BIR to deduct the withholding tax from the total amount payable. On a monthly basis, the withholding agent is also required to remit to the BIR the total amount of taxes withheld within the period. A company who fails to remit these taxes will incur further tax liability. Next is final withholding tax. It is a kind of withholding tax which is prescribed on certain income payments. It is not creditable against the income tax due of the payee or receiver of the income. Once an income is subjected to final tax, it will not be further taxed under the income tax and capital gains tax. And lastly, withholding tax on government money payments is the withholding tax withheld by government offices and instrumentalities, including government-owned and controlled corporations and local government units.
Hi everyone, my name is Tanjit Tiffany Bocon and I will be your reporter for the local taxes. When we say local taxes, it is a broad that can be applied in different kind of localities such as cities, municipalities, and school districts and some more. When we say local tax, it is a mandatory and a non-refundable payment in the budget of local self-government unit and is regulated by law and paid by every person who practices or who exercises the public right in a territory of a local self-government unit. So as part of the discussion, we have here the different forms of local taxes. So first we have here the tax on transfer of real property ownership, which is also known as the transfer tax. A transfer tax is charged levied on the transfer of ownership or title to the property from one individual or entity to another. It is also charged by a state or local government to complete a sale of property from one owner to another. So next is tax on business of printing and publication. LGU or the local government units are to collect taxes from printing or publication businesses such as the posters, cards, and books. Actually, this tax is involved or is under the tax of business. However, it is just being specific that in this kind of business, which is the printing and publication, there is also a tax involved. Next is franchise tax. When we say franchise tax, it refers to the tax paid by a certain company or a certain enterprises that wants to do business in some states. Franchise tax is also known as a privilege tax since tax is being paid by the companies who wish to conduct business in a specific space or in a specific place or states. And such examples of these are McDonald's, Dunkin' Donuts, Pizza Hut, and many more. So next is service fees or charges. This refers to a fee collected to pay for services that relate to a product, and it also includes material costs and also direct or service that is being purchased. In other words, a service charge is an additional charge for the service provided with the purchase of a product or a service. Next is business tax. Business tax refers to the taxes that business must pay as a normal part of business operation. Whether you are a partner or a proprietor, your business is responsible for adhering to tax regulations. So next to the local taxes is the community tax. Community tax is paid in place of residence of the individual or in the place where the principal office of the juridical entity is located. And lastly is the amusement tax. As amusement tax is levied on such forms of entertainment as motion pictures, theater, etc., and included in the total admission price. Also, amusement tax is imposed on the general admission charges to recreational and entertainment events. Such examples of these are the theaters and also boxings.
This is the other local taxes in the Philippines. First, barangay clearance, tax on sand, gravel and other quarry resources, taxes that may be levied by the barangay on store or retailers with fixed business establishment. So that was the two basic types of taxes in the Philippines. Now let's proceed to Miss Ruchelin.
Good day everyone, I am Richelin Sobrado. Today I'm going to tackle about the purpose, importance, characteristics, and effects of taxation. So the purpose of taxation is primarily used to raise funds for government spending, although it can also be used for any other reason. The most important goal of taxation is to provide government with the fund they need to provide basic public services. Many of the things that are essential to the operation of societies around the world, such as healthcare, schools, and social services, are paid by taxes. Characteristic of sound tax system. Number one is fairness. Tax fairness is a concept which stipulates that a government's tax system should be equitable to all citizens. Opinions differ. However, in just how to reach tax fairness, the solutions are varied but must fall under three broad system of taxation. Number two, adequacy. Adequacy means that taxes must generate sufficient money to cover society's basic necessities. 3. Simplicity means that taxpayers can avoid a maze of taxes, forms, and filing requirements. A simpler tax system helps taxpayers better understand the system and reduces the cost of compliance. Number 4. Transparency means that taxpayers and leaders can easily find information about the tax system and how tax money is used. Tax transparency is about putting an end to back secrecy and tax evasion through global tax cooperation. Administrative is the primary purpose of taxation is to raise revenue to finance government expenditure. With stable tax revenue, governments are able to provide a wide range of public goods and services such as maintaining security, constructing social infrastructure, and providing welfare services. Lastly, the effect of taxation. The first one is individual income tax, also known as personal income tax, is a tax imposed on a person's wages, salaries, dividends, interest, and other sources of income throughout the year. In most cases, the tax is imposed by the state where the money is earned. Second one is a corporate tax, also called corporation tax or company tax, is a direct tax imposed on the income of or capital of corporation and analogous legal entities. Many countries impose such taxes at the national level and similar taxes may be imposed at the state or local level.